Welcome to a deep dive. Today, we've pulled together quite a stack of sources, articles, analysis, some reports from the ground that seem to connect some different stories. We're talking corporate expansion, cross-border trade, and, well, these recent geopolitical tensions between Thailand and Cambodia.
Yeah, and our mission here is really to unpack all of that. We want to sift through these sources, pull out the key insights, and try to understand what it all means. What does it mean for the economic relationship, and maybe more pointedly for Thai businesses actually operating in Cambodia?
Right, it's kind of where big business strategy meets regional politics head on. And we want to see what the experts are saying about, well, who might be affected. Okay, let's dive in. What's been happening recently?
So setting the scene. The sources are pointing to rising tensions between Thailand and Cambodia around mid-2025. It seems to be stemming from specific incidents at the border, mentioning places like Tam Wan Tam Temple and the Chongbuk areas.
And Cambodia's response has been quite visible, hasn't it? I mean, the Ministry of Information ordering TV stations to stop showing Thai dramas and movies. That's pretty direct, effective midnight June 13th.
Absolutely. That's one angle, the cultural one. But it wasn't the only move. The government apparently also told telecom providers to, well, cut cross-border internet connections from Thailand and find other routes. And then there were Marshal Hun Sen's online posts, which were quite strong.
They were, mentioning things like preparing for 24-hour war readiness, evacuation plans even, but also specific economic steps, right? Suggesting Cambodian patients in Thailand should come home.
Right.
Banning Thai imports to boost local goods or find other sources. Preparing to buy up Cambodian farm products meant for Thailand. And even talk of recalling Cambodian workers.
It's really striking how quickly that geopolitical rhetoric can translate into, very specific actions impacting trade, healthcare, labor.
So what was the actual situation at the border checkpoints, say, as of June 13th?
Well, the sources lay out the map. There are 18 official checkpoints across 7 Thai provinces: Trat, Chanthaburi, Sikeo, Buriram, Surin, Phetkhet, Ubon Ratchathani. And as of that date, 16 of those 18 were apparently still open for business.
16 out of 18, so only 2 closed then.
That's what the sources indicate. One was Ban Muandan in Trat, which is specifically for trade. The other was the Changchom entry point to Khao Phraya Viharn in Sisaket, but that's mainly tourists going to the temple area. So the reports suggest its closure doesn't really hit border trade much.
Okay, so not a complete shutdown, but were there any sort of temporary hiccups right around that time?
Yeah, there were. Reports mentioned temporary closures, maybe 30 minutes or so, at Ban Lam and Ban Phakad in Chanthaburi on June 13th itself, apparently due to Cambodian officials doing inspections nearby.
Right. So most trade points were open, but clearly there was heightened activity, maybe some localized brief disruptions happening.
That paints the immediate picture, the tensions, the actions. Now, maybe we should zoom out a bit and look at the bigger context, the actual economic relationship based on the trade data we have.
Yeah, the numbers show it's definitely a significant relationship, and it's been growing. If you look at the first 4 months of 2025, Jan to April, total trade value hit 126,283 million baht. That's up 2.3% compared to the year before.
And border trade, that's a massive piece of the puzzle, isn't it?
Huge. Border trade alone was 64,612 million baht in that period. And what's really interesting is that border trade grew way faster, up 12.4%. It accounts for over half, 51.2% of the total trade value.
Wow. So any actions right at those border points we just talked about, they could really have a tangible effect given that kind of volume.
Yeah.
How does it break down? Like, what's Thailand selling versus buying across that border?
Okay, so Thailand's total exports to Cambodia in those 4 months, 108,383 million baht. That was up 1.6%. Border exports were 50,225 million baht, growing faster at 9.7% and making up 46.3% of all exports to Cambodia. On the import side, Thailand brought in 17,900 million baht from Cambodia, up 6.9%. But border imports from Cambodia surged even more, up 22.4%, hitting 14,387 million baht. And that's 46.6% of all imports from Cambodia.
That really underlines how crucial those land routes are for goods moving both ways. What about stuff just passing through Cambodia, going to Vietnam or China?
Yeah, that cross-border transit trade, they call it, also grew in those first 4 months, up 15.2% to 2,458 million baht. But the sources do point out that there are alternative routes, like going through Laos. So if the Cambodian border got really tight, that transit trade might find other ways. It wouldn't necessarily just stop. Limits the impact there a bit.
Good point. Okay, let's get specific. What kind of goods are we talking about? What's Thailand mostly sending over?
The top Thai exports, based on the sources, include things like refined oil, beverages, vehicles and parts, chemicals, sugar,
Hmm.
also gems and jewelry, wheat, prepared foods, cosmetics, soap, skin products, and steel. Pretty diverse mix.
And coming back the other way, into Thailand via the border.
The big one there is cassava. Apparently accounts for a whopping 41% of the total value of border imports.
41% just from cassava.
Yeah. Then you've got vegetables, prepared vegetables and fruits, aluminum scrap, copper scrap, insulated wire, and cable.
Right, industrial inputs too.
Exactly. Aluminum products, diamonds, gems, gold, electrical machinery, and even ready-made clothing.
Okay, that gives us a good feel for the flow of goods. Now, with these recent tensions and those pretty significant border trade numbers, what are the economic analysts saying? What's the overall impact expected for Thailand?
Well, analysts from firms like Yuanta and Pi Securities, their views were in the sources. They generally seem to think the overall hit to Thai GDP will be limited. They use phrases like not significant or no material effect.
Limited impact. That seems almost surprising when we just heard border trade is over half the total and growing fast.
Yeah.
How do they justify that? What's the logic?
They seem to base it on a few things. First, while Cambodia trade is important bilaterally, it's still only about 2-3% of Thailand's total global trade. So perspective matters.
Okay, scale.
Scale, exactly. Second, there seems to be an assumption that these border issues are likely to be short-term, more political signaling than a long-term economic blockade. And third, they point out Thailand's main export engines are much bigger markets, the U.S., China, Japan.
And the domestic economy is the biggest driver anyway for Thailand, right?
Absolutely. Domestic consumption is over 50% of GDP. Then come those big export markets, then tourism. And on tourism, the main arrivals aren't from Cambodia. They're mostly China, Malaysia.
Yeah.
So the direct hit there is also seen as small.
Okay. So things like the ban on Thai TV shows or maybe Cambodians buying fewer Thai snacks,
Yeah.
that's not seen as moving the needle much for the whole Thai economy.
The analysts seem to frame that more as a psychological impact, affecting investment sentiment, maybe making some companies nervous, but not really causing a major dent in overall economic growth.
Right. And the impact on specific listed companies, retailers, hotels near the border.
Seen as potentially short-term pain, but only becoming a bigger, more material problem if the conflict really drags out for a long time.
Okay, so the limited view depends quite a bit on proportion and assuming it's temporary. But what if it does drag on? What are the potential downsides analysts are flagging then?
Well, if the tension stays high beyond just a few weeks, say for 3 to 12 months, the sources suggest Thai exporters might genuinely need to start looking for other markets to make up for lost Cambodian demand.
Finding new buyers.
Yeah, and it could hurt Thai industries that depend on those imports from Cambodia. We mentioned cassava, aluminum scrap.
Logistics too, presumably.
Definitely. Higher costs, longer delivery times for anything crossing that border.
And the really long term. If this simmered for over a year,
That's when analysts see potentially more serious issues. You could see a hit to broader investor confidence in the region. Businesses might actually start thinking about relocating operations away from the border or out of Cambodia.
impacts on local jobs near the border too.
Right. And maybe permanent shifts in trade routes, more going by sea, or maybe shifting land routes through other countries instead.
It sounds like the current assessment is really banking on this being a short-lived political flare-up. The risk calculation changes quite a bit if it settles in for the long haul.
Definitely. Okay, let's pivot now and focus on the Thai businesses themselves, the ones that have actually invested and built a presence in Cambodia.
Right, because Cambodia has generally been seen as a pretty attractive market for Thai companies,
Yeah.
especially in areas like modern retail. You know, the drivers were Cambodia's economic growth, rising incomes, boosting purchasing power, more people moving to cities like Phnom Penh. And one source specifically mentioned that Thai products are generally quite popular there, seen as good quality, even if they cost a bit more sometimes.
So there's a solid business case, a fundamental demand that drew these companies in, separate from these political moments.
That seems to be the underlying strategy, yes. And we've seen some major Thai players make pretty big bets there over the years. Siam Cement Group, SEC, is a really good example. They've been involved in Cambodia for over 33 years.
33 years. Wow.
Yeah, started just trading back in 92. Then they built a big cement plant down in Camp Paw. There was a $200–300 million investment, started operating in 2007. Their total investment now is pegged at over 15,000 million baht. They've got a big chunk of the cement market with their K-Cement brand.
They operate through a joint venture there, right?
Dude, they do. Since 2015, they've partnered with Chipmunk Group in something called Chipmunk Insi Cement Corporation, CMIC. SEC holds 40% of that. And the sources say they get about 250 million baht a year in profit share from it.
Okay, so a decent contribution.
Yeah, roughly 5–8% of SEC's total net profit. The sources also mention another JV, SCG Boonthavoorn, Cambodia, focused on building materials retail. Smaller investment, around 383 million baht, but another sign of their presence.
Okay, so heavy industry, building materials. What about logistics? Getting things moving.
Leo Global Logistics is making moves there too. They recently got approval for a joint venture with a Cambodian company called Logicam. The JV is Logicam Leo, Cambodia. Leo's putting in about $1 million for a 40% stake. Total capital around $2.5 million.
And what's the plan for that JV?
To offer the whole suite of logistics services inside Cambodia transport, warehousing, customs clearance, plus cross-border links with Thailand and elsewhere. They were expecting it to start operations in early 2024.
And Leo's expanding elsewhere, too, the sources mentioned.
Yeah, they also upped their stake in Aramex Thailand, the global courier company. They now own 36%. Yeah. The idea is to boost their international express services, especially leveraging Aramex's strength in the Middle East and South Asia.
Interesting. So logistics gearing up, but also potentially exposed to these border issues we discussed. What about the companies selling directly to consumers, especially the big Thai retailers?
That's been a really active area. Macro, which is part of CPPXT, was an early mover. Opened their first store in Phnom Penh way back in December 2017. Then Siem Reap in early 2019.
How many do they have now?
They operate 3 macro stores in Cambodia now. The third opened in Kroi Changvar, Phnom Penh, late 2022. Now, 3 stores isn't huge compared to their total network, but it's about 1.7% of their regional stores, part of that expansion strategy.
And the big one, CPAL with 7-Eleven. They're there too, right?
Oh, yeah. CPAL signed a big 30-year franchise deal back in May 2020 with options to extend. First store opened in Phnom Penh in August 2021. And they've expanded fast. They now run 112 stores in Cambodia.
112 already. That's quick growth.
It is. But again, perspective. It's still less than 1%, like a 0.8% of their massive total network, which is overwhelmingly in Thailand. Still, it clearly shows Cambodia is a key target for their growth plans.
And Big C. I remember hearing they opened near the border.
That's right. Big C, which is part of BJC, opened its first hypermarket right in Poi Phet, which is very close to the Thai border. Smart move to capture cross-border shoppers. They've got plans for more big stores in Phnom Penh and Siem Reap, and they're also rolling out the smaller mini Big C format.
How many Big C stores total in Cambodia?
Across the different formats, BJC operates 25 stores there now. Again, a small fraction, maybe 1.2%, of their huge regional total of over 2,000 stores.
Okay. And PTT, or OR rather, with their gas stations and cafes, they seem pretty visible there?
Definitely. OR seems to have found a successful formula, especially with Cafe Amazon, alongside their Jiffy convenience stores at PTT stations. They use a franchise model. They've built up quite a network. 186 gas stations, 254 Cafe Amazons, and 71 convenience stores in Cambodia.
That's substantial. Do we know how much it contributes?
Well, the sources noted their 2023 EBITDA, that's earnings before interest, taxes, depreciation, amortization from the whole CLMV region, which includes Cambodia, was about 1.2 billion baht. That represented around 7% of their total EBITDA. And crucially, reports said their operations in Cambodia were running normally amidst these tensions.
Good to know. Are there other big Thai-listed companies with a significant footprint that the sources mentioned?
Yes, quite a few others. CPF, the big food and agriculture company, they have a production base in Cambodia, mostly serving the local market there. Apparently contributes about 3–4% of their total revenue. They've been there since '96 through CP Cambodia, doing feed, farming, food processing, even retail like 5-star chicken outlets and CP Fresh Marts.
What about healthcare? Any Thai hospitals operating there?
BDMS, the hospital group, runs 2 hospitals in Cambodia, but it's a small part of their business, maybe 1% of group hospital revenue, and mainly serves expats. Another hospital group, BCH, gets a mention, not because they have a hospital in Cambodia, but because one of their main hospitals is in Aranyaprathet, right on the Thai side of the border.
So potential sentiment impact if border crossings get disrupted.
Exactly. More sentiment risk than direct operational exposure in Cambodia itself.
Energy and materials besides SEC.
BG Ray, the power company, has a solar plant in Cambodia, 39 megawatts. But again, it's small relative to their total capacity, only about 1%. And SCCC, the other big cement player, also operates through that Chipmunk NC Cement JV we mentioned earlier, holds 40%, gets about 5–8% of its net profit from there, similar to SCC's situation.
Even media companies.
Yep, major Cineplex. They operate 6 cinemas with 33 screens in Cambodia. That's about 3.8% of their total screens. They got started there through a joint venture with Iman Mall and Phnom Penh back in 2014.
Wow. So it really is a diverse spread of Thai industries, materials, logistics, retail, food, energy, healthcare, media, all actively invested and operating in Cambodia. They clearly saw long-term potential.
Absolutely. They've built a significant presence across many sectors over the years.
Okay, so bringing it back to the current tensions, how are the analysts sizing up the specific risks for these individual Thai companies we've just talked about?
Well, the analyses we saw from places like Asia Plus and UOB Kay Hein, they tend to categorize companies based on how exposed they are.
And is there anyone flagged as being at high risk from this situation?
Just one company really stands out in the sources as facing potentially significant negative impact. CBG, Carabao Group.
Ah, the energy drink maker. Why them specifically?
Because Cambodia is just a massive market for them. It accounts for 37% of their energy drink sales, 37%.
Wow, that's huge.
Yeah, and it's 21% of their total group revenue. So any disruption there hits their bottom line directly and significantly.
And didn't they have plans to build a factory there too?
They do. They got approval just last year, August 2024, for a joint venture factory. It's a $40 million USD project, CBG subsidiary holding 60%. Production was estimated to start around early 2026. So this current uncertainty, it definitely puts a question mark over that big investment plan, or at least the timing.
Okay, so CBG is kind of uniquely exposed because of that heavy reliance in the future plans. What about most of the others we discussed? SEC, CPALL, Macro, OR. They seem to land in more of a limited risk bucket in these analyses.
That's right. For most of the others, the analysts see the fundamental financial impact, right now at least, as limited. Take a Sotspa, OSP, another beverage company. Their revenue share from Cambodia is tiny, like 1–2% of total sales, much less exposed than CBG.
And the hospitals.
BDMS, we said, is only 1% of revenue from its 2 clinics there, mostly expats. BCH's risk is that indirect sentiment thing due to its border location.
Okay. And the big players in energy and retail, despite their physical presence.
Yeah, BDREM solar plant is just 1% of their total power capacity. Aura's operations are apparently normal, and while that whole CLMV region is 7% of EBITDA, Cambodia itself is only a part of that. For the retailers, CPAL, CPAXT, BJC, yes, they have stores on the ground. 112 7-Elevens, 3 Macros, 25 Big Cs.
Seems like a lot.
It does, but relative to their total empires, it's small. We're talking less than 2% of their total store counts for each of them. Their revenue engines are overwhelmingly powered by the Thai domestic market.
So the idea is, even if things get tough in Cambodia for a bit, it doesn't fundamentally derail these giants because their exposure is diluted.
That's the perspective coming through in these sources, yeah. Based on the percentage of revenue, profit, or assets tied up specifically in Cambodia. Same logic for the materials companies like SCCC and SEC, that 5–8% profit contribution for the JV is notable, but it doesn't make or break their year. CPF's food production is 3–4% of revenue. Major cinemas are under 4% of screens. It's about proportion.
Got it. And were there companies mentioned as having basically zero exposure?
Yes. The analyses pointed out that ICT companies, tech companies, didn't seem to have significant investments there. Same for some major food exporters like TU, ITC, GFPT, and also Thai real estate firms. Just not a focused market for them in terms of direct investment or operations.
Okay, so the overall brokerage view seems to echo the macro picture we discussed earlier. The immediate impact is seen largely as psychological, as sentiment, especially for companies without that heavy direct reliance like CBG.
Precisely. The analysts are emphasizing that for most of these companies, the current situation hasn't fundamentally changed their core business, their revenue outlook, their profit forecasts. They even suggest that expansion plans, maybe even CBG's factory eventually, might still go ahead if companies view this as a temporary political storm rather than a permanent shift in the climate. The key takeaway from the analysts seems to be, watch carefully, see if the conflict becomes prolonged or if Cambodia implements clear, widespread policies that really target Thai businesses. That's when the assessment might change.
Right. Which brings us neatly to the outlook. Summing this all up, what should listeners really take away from this deep dive?
Well, I think the sources together paint a picture where, yes, these recent tensions create uncertainty. There's definitely psychological pressure. You see it in market reactions, especially for heavily exposed companies like CVG. But for the majority of Thai-listed companies, the fundamental risk right now appears limited. And that's mainly down to diversification. They have broader revenue streams, assets spread across different markets, not just Cambodia.
And it seems, despite these political flare-ups, the underlying view of Cambodia as a market still holds some weight. That long-term growth potential, the demand for Thai goods.
Yeah, some sources definitely provide that context. It explains why companies went in. There's this perception of long-term opportunity based on Cambodia's own development and consumer tastes, and that rationale might still be valid for many, separate from these short-term political waves.
But as you said, it's not static. Things could change.
Absolutely. The situation is fluid. If tensions were to stay high for months, leading to serious, sustained border closures or more aggressive economic policies from Cambodia, that could definitely shift the landscape. It could impact trade flows more deeply, mess with logistics, and really start to dent investor confidence in a way we haven't seen yet.
So wrapping up, what does this all mean for you, listening in? We've seen how political tensions, even if analysts initially say the overall economic impact is limited, can definitely cast a shadow. It affects sentiment, and it poses real risks for specific businesses deeply tied to that market.
And we've also seen the diverse ways Thai companies have strategically placed their bets in Cambodia, from cement and logistics to 7-Elevens and Cafe Amazons. It shows a kind of calculated long-term confidence in that market's potential that, for many, seems to be weathering this current storm for now.
Yeah, this deep dive really highlights that delicate dance, doesn't it? Between big geopolitical events and the established, everyday reality of cross-border business.
It really makes you think. Here's a question maybe for you to chew on. In a world where political headlines can change on a dime and impact business, how can companies build real resilience, not just financially, but structurally, in their supply chains, in their market choices?
And maybe another thought, what does the fact that Thai products and brands seem to remain popular in places like Cambodia, even when there's nationalistic rhetoric or political friction, tell us? Does it say something about the enduring power of consumer preference, maybe cultural connection cutting through the noise?
Something to consider as you digest all this information.